like any pattern, right? Once you break the pattern, you typically make the height of the pattern to the upside, okay? So, two ways to look at this. You can look at the W, as we already pointed out, or the Wu-Tang symbol, whatever you want to call it. That is a reversal pattern, right? We happen to be on the daily time frame, but if you go on a smaller time frame, this works all the same. This is just pattern analysis, where you see these W reversals in price action, and when you break the neckline of these W patterns, you typically go the height of the W pattern. Okay, that's one way to look at it. The other way to look at it is you have this 180-day range. You're breaking the top of the 180-day range. What do you get when you break a range to the upside? You typically get the height of the range superimposed from the top of the range. Okay, so that's why I'm really, really, really inclined to say, look out 42K. Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is October 23rd, 2023, and Bitcoin continues inching upwards. It continues its move to the upside, slowly but surely, and altcoins follow. Furthermore, and maybe even most importantly, I'll say, is that our liquidity provider, the US dollar, okay, the US dollar currency index is showing a strong move down. So we're going to look at all of those factors. Guys, if that sounds interesting to you, then watch until the very end. Hope everyone's having a good day. Bitcoin on the daily time frame, what do we have here? We're finally getting this move, okay? And this is kind of dovetailing off of what was said in the last update over the weekend, saying that we're seemingly in an impulsive move, meaning that despite the up and down kind of, sideways consolidation that we got on Saturday and Sunday, right, in this area right here of the chart, right, it was kind of up, it was up and to the right consolidation. So, a consolidation sometimes happens like this, okay? Yeah, it's just straight sideways consolidation. But then we have something that's called up and to the right consolidation, which is really bullish, okay? And when you're talking about an accumulative consolidation, meaning a consolidation that's preceded by a move up, right? A consolidation that's up and to the right, and then followed up by another move up, just is very bullish. That means that there's so much buying pressure in the move that the consolidation isn't sideways, but it's diagonal, up and to the right. And that move, the entire move, shows a massive amount of strength. This is pretty much what we're seeing in Bitcoin's chart right now, right? You can see that ever since we got to, let's say, Thursday, right? Thursday of last week, Thursday the 19th, we started going up into the right consolidation, and followed up by a strong daily candle. I mean, look at these daily candles. This is also why I'm saying this is impulsive price action. This is the definition of impulsive price action. It just keeps going in the direction of the impulse. You can have this either up or down, right? In this case, it happens to be upwards. And it doesn't stop until we reach common sense resistance. Okay, so we're going to talk about where that common sense resistance is. Just recap it. If you watched the previous episode, we did talk about that. But here you can see that uninterrupted, pretty much on a daily time frame, we've just kept going up and up and up and up. And despite some intra-wave consolidations like this right here, right, that happened on the weekend, we still maintain the general trend. This is what we call in Elliott wave theory an impulse. And this is more specifically a pure impulse, not an impulsive move that is initiated by some sort of correction. No, this impulse is one that will stand the test of time, retrace, and then keep going. So that's why this is really attention worthy. Now, zooming out just a bit, looking at what we're dealing with, like you can see very clearly on the daily time frame, you're looking at this Wu-Tang symbol or, a W pattern, okay? We have in the past looked at this as a very nice correction, WXY, ABC, a flat correction, a three-wave move, right? Elliott wave tells us that most corrections, pretty much all corrections, happen in certain flavors of three, okay? And so when we got this on a high time frame, we knew down here that it's very likely, with a high degree of probability, that the move back up to the top of this range would be the move that took us up and out of this range. So here we are with this move taking us up to the top of the range, and very likely, especially just looking at the candle today, the daily candle today, it looks like this is going to continue up and through the top of the range, right? Because look, this right here was a bounce off of the top of the range. Very, expected, right? Because there's resistance at the top of this range. You've been in this range for, let's see, you'd been in this range for about 180 days. So as soon as we hit the top of the range, we bounced off of it. And we didn't break down from it. We didn't reject from it. We just consolidated from the top of the range, the top of this 180-day resistance. So we did that, and now we're breaking through. So what should you expect? Okay, what should you expect? I'm going to draw something out for you all. This is what you should expect with a high degree of probability. Everything in technical analysis is probabilistic. So this is all, with a high degree of probability, not 100%, okay? But with a high degree of probability, given what I just said, let me find the tool. I'm sorry. I can never figure out where these tools are. Okay, here we go. This is what I want right here, because I really want to pay attention to this 180-day range. And this 180-day range is being broken. That's what's happening right now. That is the big news. That's the big deal. It's not just, you could say it's 30,000, but, let's get more specific. As traders, as analysts, we want to say what exactly is happening. It's not just 30K is broken, nice round number. That's what most common sort of investors, traders are saying. We really want to pay attention to 30,000, but as the resistance of this 180-day range. And like any pattern, right? Once you break the pattern, you typically make the height of the pattern to the upside, okay? So, two ways to look at this. You can look at the W, as we already pointed out, or the Wu-Tang symbol, whatever you want to call it. That is a reversal pattern, right? We happen to be on the daily time frame, but if you go on a smaller time frame, this works all the same. This is just pattern analysis, where you see these W reversals in price action, and when you break the neckline of these W patterns, you typically go the height of the W pattern. Okay, that's one way to look at it. The other way to look at it is you have this 180-day range. You're breaking the top of the 180-day range. What do you get when you break a range to the upside? You typically get the height of the range superimposed from the top of the range, okay? So that's why I'm really, really, really inclined to say, look out 42K. Look out 42K. I understand 32.4 is that phi ratio of this preceding drop. I understand 32.4 is an important level, but 32.4 essentially was the resistance here and here, right, for 180 days. So what I think, with the high degree, again, all probabilistic, with a high degree of probability, what I think is going to happen is Bitcoin go straight to 42, right? Finally, 42.7 specifically, okay? And then what we're going to see on the full moon, right? Because we know in technical analysis, full moons represent market nadirs, right? Local market bottoms. So today is Monday. I expect 42K in the next 48 hours because I then expect for us to quickly go back down and find a retest of this ever important 32,400 that has served as resistance for 180 days to be flipped into support. This is something I keep repeating. I understand there aren't that many viewers because crypto's been down and beaten, kind of very unsexy for 1,000+ days. But for those of you who are tuning in, I always say that one of the principles of technical analysis that is tried and true on any time frame, whatever, it doesn't matter if you are an Elliottian, a Wyckoff trader, a Gann trader, a down trader, it doesn't matter. You will always see this respected. When you break major resistance, you have to retest that long-standing resistance, that major resistance as support before continuing on. This is why that 32,400 is going to still be important, although I don't think we're just going to stop here. I think we're going to blast through it because it's one try, two try, third time's a charm, blast through it, come back, retest it as support for that Friday full moon, which represents local market bottoms. And you especially see the local market bottoms when price is in impulse. And like we said in the beginning of the analysis, it's highly likely that given the price action, that we are in pure impulse, okay? So that being said, from where we're at now at the time of recording, 32,400 approximately, I see Bitcoin going approximately 36% to the way up. 36%. Guys, are you ready for this? Are you kidding me? 36% up after going 180 days sideways between 32,000 and 26,000 essentially, right? This is going to knock a lot of people's socks off. This is going to surprise a lot of people. But this is what the technicals are saying. We're not going to go by what happened yesterday or 2 days before. We're just going to look at the charts. That's what we've been doing. Okay? So the charts are telling us we're getting a 35-36% move in Bitcoin. If we're getting a 35-36% move in Bitcoin in the next 48 to 72 hours, guess what's going to happen in altcoins? Right? That is a story. So with that being said, let's go into the total two because that is really interesting. All right. The total two represents, again, for those of you who don't follow the updates or don't know, the total two represents everything in the cryptocurrency market minus Bitcoin. So essentially all the altcoins aggregated in one chart. That's where you get your total two. So in this total two, the logical next major resistance is going to be that $1 trillion level, okay? So while Bitcoin is going and doing 36%, we should expect, with a high degree of probability, altcoins to do about 83% in aggregate. Some altcoins are going to do 200%. Other altcoins are going to do 60%, right? It's an aggregate thing. But all I'm saying is I've got my yellow line with an alarm right here for when altcoins hit this level. And what I expect after this is a move right back down here. Why? Because just like what we saw in the Bitcoin chart, 1 time, 2 times, 3 times a charm. This is major resistance for, let's see how long. Wouldn't be surprised if it's the same as how long Bitcoin was. No, even longer, sorry. 500 days. There is no way on God's green earth that this chart not retest this 500-day resistance right here as support. There's no way. Okay? A lot of bets could be made for a lot of ways price action can move, but if you make that bet, 9 times out of 10 you're going to win. High time frame, high, staunch resistance needs to be flipped into support. So if what happens in Bitcoin is true, right? In the next 48, 72 hours, we get that move to 42K. Alts go to $1 trillion. It'd be wise to take profit in alts when you hit this yellow line, because what you're going to see with a high degree of probability, and let's pull out our Fibonacci retracement tool, is alts retrace right back down to this phi ratio, this 0.618, to give you a retest of your 500-day resistance. Wave 1, wave 2 on Friday, full moon, local market bottom, then get ready for the real fireworks. Guys, that is the analysis on altcoins and Bitcoin. But before we leave, I'd be remiss if I didn't talk about the US dollar currency index. The DXY is what gives us liquidity. It's the market mover. It's the market maker. Let's flip on the daily time frame and see what is so significant about what's going on. Now, let's get rid of our momentum indicator because we don't need it right here. And also, let's get rid of this. I don't want to confuse anybody. This is very likely what we're seeing in the US dollar currency index. We've seen ever since the end of last year a move down in the US dollar currency index in the aggregate. But although we got the beginnings of this move down, what we've gotten since the beginning of this year, essentially, since January of this year, is a sideways move with a relatively large amplitude, right? So it's not like a small sideways move. It's a big sideways move where you're going up and down, with large swings. But it's a very, very clean support and resistance. You have a very well-defined channel that the US dollar has been in, okay? And this tells me, with a high degree of probability, that what's going on in the US dollar currency index is you're getting a massive zigzag. What's a zigzag, right? That's basic Elliott wave theory that's one of the corrective patterns in Elliott wave theory, where you get 5 waves down, 3 waves up, and 5 waves down, okay? And what happens with the 3 waves up is the 3 waves up come between the 0.5 and the 0.618 Fibonacci retracement level of the initial 5 waves down. Okay, so this is just one flavor of a corrective, one type of correction that you see in Elliott wave theory. This is very likely, almost nothing's definite, but as definite as possible that that's what we're seeing in the US dollar currency index. So that being said, if we got the initial 5 waves down, we got the subsequent 3 waves up, 1, 2, 3. What we now need is the final 5 waves down. If this move out of 30,000 is what we think it is, right? It would make so much sense that the US dollar would be breaking down from the midline, or from the, what do you want to call it? If you want to call this a WXY, right? A double 3. The X wave, the top of the X wave. The US dollar currency index is breaking down from the top of its X wave and finally giving us an impulse down. Remember, impulse. It just keeps going in the direction that it wants to go until it reaches common sense resistance or support. In this way, in this sense, you're going down until you reach common sense support. All right, the big support to the downside is down here at the bottom of this 10-year channel for the US dollar currency index. I'm not going to go too deep into this chart just for the sake of time. But all that being said is, if this analysis is in any way true, expect the US dollar currency index to largely just keep dumping and bleeding to the downside until we hit somewhere down here, and that may yield a month, 2, 3 month long move to the upside for Bitcoin and risk on assets. That's really what's interesting on the high time frame in so far as what's happening in the US dollar currency index, right? And on the smaller time frame, on the 4-hourly time frame, what you're seeing is a distributive move, right? Where you had this channel, and this channel has been going up and down, up and down, up and down, and a distribution is essentially a consolidation that breaks down, right? Accumulation, consolidation that breaks up, distribution, a consolidation that breaks down. This is what you're getting here. You put in the sufficient amounts of, waves up and down and up and down and up and down, and finally you're back down to support. And what you want to see for a breakdown confirmation is a breach, retest, and then a move down into the impulse. So that's what I believe we're seeing in the US dollar currency index. Already today, we've put in a very strong move to the downside. So this is likely happening. And this is not surprisingly coinciding with Bitcoin's break of the $30,000 level, which I want to remind everybody. Yes, 30,000 is very important, but why is 30,000 important? That's really what you should be focusing on. 30,000 is so important because 30,000 in Bitcoin represents hundreds of days of resistance, okay? You saw that in this blue channel that we designated earlier in the video, that this channel was about 180 days, but actually, if you look at it more closely, it's closer to 200 plus days. But if you also bring into the analysis this block of price action, you can say that you're dealing with a massive resistance in Bitcoin at the $32,000 level, right? That if we break it, you will be breaking 500 days of resistance, just like in the altcoins. Guys, I hope this was helpful. I hope this was useful. Like, share, and subscribe if you got value. I'm very excited. I feel like, if you've been in crypto, it's been, really tough. We've been in the doldrums. We've been sideways. Not very exciting. But if you've stayed with it, you've learned a lot. Maybe you've lost some money, but you've learned a shit ton. And you're prepared, at the very least, for what is coming next. So that's it for me. Hope you guys enjoyed that, got some value from it. And if you did, like, share, and subscribe. And I will see you next time. Take care.